It's really hard, I think, for people above the age of 50. And since I'm in that cohort, I don't think people above the age of 50 can possibly comprehend what you can do with it to improve your productivity, because in a lot of cases they've risen to a level where there's not much to be productive from.
We are not losing jobs. We are just giving the jobs to the machines and the software.
It's really hard, I think, for people above the age of 50. And since I'm in that cohort.
We think you look 21.
I know. It's so nice of you too. Right, Matt? Yeah, it's good. I don't think people above the age of 50 can possibly comprehend what you can do with it to improve your productivity, because in a lot of cases they've risen to a level where there's not much to be productive from. Like, I hate to say this, but most people that are running businesses that have been up there, they've got other people to do this stuff, which means there's a disconnect between what it can do and what they understand it can do. And I think that's been one of the issues with the adoption numbers that you've heard from MIT, and these things keep going on and on and on. I do want to make sure that people realize when we talk about the job situation, AI is having an impact and will continually have an impact. It's happening. It's definitely going to have an impact for the incumbents and for the bigger companies. The startups won't hire as much as they usually do. So in Shane's case, he doesn't need as many people. So you have a weird dynamic that the jobs market is really being impacted by the AI side, but it's also being impacted by immigration, which is a big component, and it's being impacted by demographics. So we're going to stay around zero, in my opinion. You've got all these moving forces, which are going to make it difficult. The problem with that is that breaks all historical models of what AI is doing is you are getting more productive because you're growing without hiring people. And so if the economy is growing at 4.5%, and we're not hiring any more people, which is what's been happening for the last 4 months, then by definition, we're getting more productive. That is why profit margins have been the best gauge of kind of the productivity boom that's happening. And so I think the management people just don't understand what's happening. And that's why I'll say all the time that incumbent companies are going to have a really hard time for a lot of reasons to stay in the game past the next 3 years, because eventually the digital employees will be going. We don't have AI agents in a big way, but that's really when the white collar jobs are going to suffer dramatically. And those people, I don't know where their jobs are going to be. So for a lot of the younger people, I heard Mark Cuban talk about this on the All In podcast, basically saying to them, don't even take a job with a big business. Like, you're going to suffer there. Like, they're not going to be able to adopt AI in a way that's going to help your life. You're not going to get smarter at it. Go to a business, a smaller business like Shane's business, where you can do what Shane's doing, because that's going to help you. Even if that job doesn't work out, you can go to another one. So I think young people are actually getting a little bit of a break, not getting these big company jobs anymore to the degree that they would. They just have to be using AI, because those people are not going to use AI.
Could we see that type of stuff start to play out here, whether it's AI, whether it's robotics, whether it's, some of these other kind of physical world technologies?
Well, let's get rid of the word subsidize, and I'm
spoken like a true capitalist.
Well, here's the thing. I think the administration is using a lot of China tactics. So part of what you said, I've highlighted in recent writings and in the video last week. I spent a lot of time on how the administration realizes that for national security, so let's go back to the worst part of the tariffs, the market's collapsing. You and I are sitting here and we just keep taking out our little 3-iron and we're hitting the ball down the middle of the fairway and going, okay, everyone's going to panic. Everyone goes through this. They're worried about doom and gloom, but it'll work itself out. And the reason it'll work itself out is, at the end of the day, number one, the stock market's not allowed to fall because it's been financialized. So it can't fall, or there's a recession. We can't have a recession because we have 6 to 7% deficit. Debt to GDP 100. You can't do that. Okay, so what's the other problem? The other problem is we have a national security issue. What's the national security issue? Well, if someone gets AI before us, we're at a huge disadvantage. So we need to focus on AI. What else do we depend on? Well, to actually get the AI, we have a national security issue. What's that? Most of the stuff we need for the AI is made in China. So we're racing with China. They have a lot of our supply chain. Okay, so we have to change this whole thing, and we need to declare emergencies around national security. And so Taiwan Semi, you're going to build a fab here because your chips are sitting a boat's ride away from China. So exactly what you're saying is what's happening. And this is why they are going to continue to focus on, we got to go get our own rare earth. We have to build our own semiconductors here. We have to, and just keep going down the line. So the way that they're going to speed the things up here to the best of the ability is through the permitting side. It's through the tax incentives. So for CapEx, by allowing them to change the accounting rules on how they deal with the CapEx so that they can grow their way into it, that's kind of like a subsidy. It's kind of like, okay, you guys spend today, you're going to hopefully grow into it with your return on invested capital. The problem is, do I believe that, like in China, that means there's going to be a misallocation of resources? You're damn right I do. But that's 5 years down the road. And our job as investors is to think about what the way the market's going to work over the next year. There are going to be PMIs that are going up because the government is reducing the friction and setting a path. And as I've heard all of them say, and especially Chris Wright for the Department of Energy, if you have a situation where you can produce power and you're having restrictions, you call us up. That's a different mentality than it was before, where you couldn't get through to the administration on certain items. So they have made this a critical situation. Everyone can argue about whether it's the right thing to do, just like with the Fed. The reality is, as investors, they're allowing this to happen. There's going to be a misallocation of resources, but that's way down the road. And right now, this is a national security issue, which means we're going to grow the economy hot and we're going to move rates lower. That's the playing field you're involved in. So I think all of that's going to happen. I think there is a lot of China thing, because I think if your competitor's doing these things, you can't do exactly what they're doing, but you can do a form to kind of speed up and make sure that we can move at the same pace.